Hey there, it's Caryn, and today I need to tell you about the red flags I'm seeing in today's market and kind of what I think is going to happen in the next 12 months, 18 months, and how to navigate through it. So today's market's hot. Everyone's talking about it. It's such a hot market. You'll get multiple offers, way over asking, blah, blah, blah. It's true. It's true, especially here in the DC area. If you're a seller and you put your house on the market today, it's a single family home, it's priced right, good condition, you can pretty much guarantee you're going to get multiple offers. It's going to go way over asking, and most likely not a lot of contingency, so you're going to walk away really happy. The problem is that the buyers that are buying these houses are falling into two categories. The buyer that actually made the offer and won it has paid over asking and is really happy because they have the low interest rates. They're about 2.5 right now, which is ridiculously low. And they're going to have that for the next 30 years. So it will offset the escalated price that they paid today. But for today, they have to come to closing most likely with more cash because the house probably doesn't appraise at the escalated number. And the bank's only going to loan you money based on the appraised value. So these buyers are coming to the table with the difference between the appraised value and the price they actually paid to the closing table. Secondly, there's some costs that they are not aware of because they may not have done an inspection, and so you have different repair costs or renovation costs that they normally would have known about in a normal market and negotiated with the seller. But in this market, they just wanted the house and they were in competition with 10 other people. And so they just said, forget it, I just want the house. And so now that they're in the house, these costs are going to come up and they're going to have to pay it. The second set of buyers are the ones that didn't get this house. Okay, maybe they bid on a couple more houses and lost them as well. So they're looking at what else is around. What other inventory is there in this market? And those are the houses that don't sell in the first week. And the question is, why didn't they sell? So either they're overpriced or the condition isn't good. It's really, that's the only two, it's one of those two reasons. And now these buyers are saying they're becoming a little bit desperate because they're either living in an apartment and they want to get out of the apartment because of the pandemic and they want their own space. They don't want to share elevators, they don't want to share hallways, they want their own space. Or these buyers find that they're now working from home, so they need a home office. So once again, they need more space. Or they want outdoor space that's private so they can entertain their family and friends safely. All very good reasons, by the way. But it makes them a little desperate. So now they're buying the house that sat on the market for, it could be as little as 3 weeks. I know it sounds crazy, but this is what's happening. Or it could be longer. And they may inherit a slew of problems, either repair costs or renovation costs. Or they may get buyer's remorse because it's not really the neighborhood they wanted. It was just like, we need something now, and now they have to think about the different schools that they're in possibly, or the commute that they're not thinking about now, but when we go back to work, which we will, that commute. So both buyers are going to have some issues that you wouldn't normally have in a normal market. The other problem we have is that we have no inventory and we need to know where that's going to come from. So two things are going to happen. One is the pandemic's going to calm down. The election will get resolved and people will calm down about that and kind of know what we're doing for the next 4 years. We'll get a vaccine, hopefully by the end of the year, but most people are saying by next summer, but we'll get it eventually. And that will calm everything down. And sellers that were going to sell, but kind of became too scared because when people are scared, they don't make a move. And with the election and with the pandemic, a lot of people are just frozen scared and they don't want to do anything. It's a very normal reaction to stressful situations. So once everything calms down, these people will then go put their house on the market. And that's a great source of inventory. The other source of inventory is one that makes me a little sad, I'm not going to lie, because these are the people that took advantage of the mortgage forbearance program that COVID enforced, the banks enforced due to COVID. The banks allowed, I shouldn't say enforced, the banks establish a mortgage forbearance program that would not hurt your credit if you took advantage of it. So some people took advantage of it because they could. They're like, we don't know what's going to happen. It's for 3 months or 6 months or even possibly longer. And then the time is up, and it's going to be coming up right about now because it happened in March and April. And now you got to start paying your mortgage again. And if you think that, well, now that I'm going to pay my mortgage again, I'm just going to refinance and get the lower interest rate, I'm here to tell you that's not going to happen. You cannot refinance your house if you took the forbearance, unless you pay it all back. Meaning not only the mortgage, but the property taxes, the insurance, any of the escrows. If you pay it all back, you can then refinance your house. But until you do that, you cannot refinance your house. So if you think that's what you're going to do, I'm here to tell you you're not. And now other people took the mortgage forbearance program because they had to. They simply could not pay their mortgage. Maybe they were let go or laid off, or they're self-employed and their businesses are closing. There's so many people in this situation. So they took advantage of the program. But now what? Now they have to pay their mortgage. And it's very possible that their situation hasn't changed. So as soon as the foreclosure moratorium has ended, which it will, unfortunately, these people are going to be put into foreclosure if they can't pay their mortgage. And this is going to take a little bit of time. So that's why I say the foreclosures are going to come around 18 to 24 months because it takes time for a house to be foreclosed on. Or the sellers are going to realize that they're going to be foreclosed on. They prefer not to be, and they will quickly put their house on the market. Hopefully not a short sale, because hopefully they've had it for a while, just purely because they can't pay the mortgage today. So that's going to be another source of inventory. But I didn't like it in 2009 and 2010. I don't like it now. It makes me sad to see people having to sell their homes because they can't afford them. But it's going to happen. So I want you to be aware of it. The next thing you need to understand is that people who were thinking, well, I'm just going to build a house, the builders in March immediately shut down and then realized they were essential workers. So they went back to work and they've been working like crazy, like a frenzy. But the lumber costs have gone way up. So it's much more expensive to build a house now than it was a year ago. And their times are delayed because everything that needs to be imported, whether it's appliances or lumber or materials, they're coming from somewhere and it's all delayed. So you have much higher costs and delayed time. So somebody who is building new construction and then going to sell their house doesn't really know when that's going to happen. And other buyers who are just sick of the multiple offers and just want to buy a new build, aren't going to have the same incentives that they normally would have because it's much more expensive to build today. So that's another issue, red flag, that we're not really talking about, is that builders are much more expensive now and the incentives are down, and the inventory that's going to come, unfortunately, is coming from a very, sad source of foreclosures and people that just can't afford to stay in their homes. So what are we going to do about it? How are we going to get through this? Well, first of all, we are going to get through it, and it is going to balance out the market. I don't think interest rates are going to go up, and if they are, it's going to be very minimal. So these twos interest rates, even if they go in the threes, are still going to be really great. So that's a good thing. But what's happening now is we have a false sense of our economy because the numbers are skewed. So, for example, the unemployment numbers, they're just not correct because they only take into account people that are actually unemployed, that are asking for unemployment insurance. What they don't take into account are workers that have been furloughed. So they're still employed, but they're not getting paid. And these numbers are very skewed. And unfortunately, these people are going to fall into the previous category where they're not going to be able to afford their homes because they're not getting paid. And yet they're not counted in the unemployment rate. So it's a false sense of security with the economy. So once again, it sounds like doom and gloom, but these are the facts. I'm just telling you what's happening. So the numbers are skewed. The economy is a very false positive right now, but with the election calming down, with the pandemic calming down, which they both will, We will see more inventory from good sources, like sellers will not be afraid anymore, and from sad sources, the people that just can't afford to stay in their homes anymore are going to have to sell. I think interest rates are going to still stay low, so buyers will still be able to take advantage of it. And my hope is that we can just stay still long enough to get through this together and really embrace any of the help anyone's offering, whether it's a stimulus or friends and family, until we get through the pandemic and through the stress and anxiety of the election and get to a more calm market, because we will get through it. We always do. And if we do that, I think that the market will balance itself out and people will be able to buy again without all those burdens and flags that I spoke about of repairs you didn't know about or excess money you had to spend. So if you want to talk more about this, I'm always happy to talk about the markets. I know this wasn't my usual upbeat video, but I thought it was really important. You can call me or text me or email me if you want to talk more about it and get into the numbers, dig a little deeper. NAR sent out a number that said that real estate prices, sales prices have gone up 8% in the last year. So that's a good thing. Just realize, especially if you're already in your house, if you bought it for $600,000, it's worth $648 a year later. I mean, that's a good thing. But also just be aware that with inflated values comes higher property taxes. So even though you may not have been the one that sold your house, maybe your neighbor or the person down the street, as your property value goes up, your property taxes, when it's assessed again, will also go up. But it's not a terrible thing because your value's gone up, but it's just something you should be aware of because once again, it's not something most people talk about. So I'm just telling you to be aware. Okay, well that's all I have to say for today. I feel like I've gone on enough. I hope I haven't bummed you out. But if you want to talk more about it, call me, text me. I'm happy to talk about it. We will get through this together. There is light at the end of the tunnel, but there are red flags right now, and I just want you to be aware of them. Okay, thanks for watching. I do appreciate it. Bye.